Rohr here with an early, concise highlight on Friday, May 15th, 2015. It's currently 6 a.m. U.S. Central Time, and we are coming to you a bit earlier than usual because we wanted to get this up prior to the series of important U.S. data we're going to see today. And it'll be concise because we're only covering the equities, which we kind of skipped yesterday and covered the foreign exchange and govies in depth. And, we now must ask, what does all this mean to the markets? And for now, it's most interesting, again, that on the week data Wednesday, the market held up. This is once again the hourly on the left, 30-minute on the right for the U.S. June S&P future. But yesterday, in a bit of a data vacuum, however, with weekly initial jobless claims remaining low in the U.S., and we think that was a bit of an inspiration for the bulls, this market pushed back up. And we had said the key resistance was going to be up here into the 21.12 to 15 area. And the market approached it early in the day, but by lunchtime it was pushing out above 21.15, which is a strong sign. Now, this morning it's up to 21.20, and that is up a couple on the day, and it's been up to 21.2270, and all of this amounts to a new lead contract all-time high. And most importantly, the reason we were looking at 21.12 to 15 as resistance is because of the roughly, again, rounding these up, 21.12 close few weeks ago on Friday. 2 weeks ago Monday, the market set that 21.19 all-time high but closed lower, and that left a downside closing price reversal with a tolerance to 21.14.5. So we've rounded it up to refer to it as 21.15 that the market stalled at on that Tuesday a couple weeks ago, on the following Monday coming in, and out of last Friday's employment report into this Monday. But pushing through it is kind of important, and seeing whether it can maintain it today in the wake of the U.S. data will be equally important, because if it manages to succeed in remaining over 21.12 to 15 generally, and especially above 21.19, the next oscillator resistance in the next week is not going to be, as we will see on the intermediate term chart, till about 21.40 to 45, and the topping line is up around 21.55 in the next week. And one of the things that the bulls have going for them right now, and the bears are going to need to reverse, is that the hourly MACD, as the market pushed to the through the resistance yesterday, got out above its upper runaway band. Now the question is this another fizzle like out of last Friday into Monday, when it was up and looked like it could feed on itself but then waned back down? Or is this a sustainable escape to the upside that might see us up another $20 to $35 before this market is done? It's going to be interesting. And that pretty much does it for the short-term view of the S&P 500.